I would like to bring in the next discussion, which is on the implementation of DORA. We've already talked in many sessions on DORA. Petra mentioned the work that's being done. Verena Ross raised it. George just now mentioned it as one of his 7 concerns from a supervisory perspective. I think now the question is, where are we in the process on DORA? And I'm delighted to see Jerry Cross is just coming in. Jerry is working at the CBI, Director for Financial Regulation, Policy and Risk, and just as a part-time job also coordinating the work of the 3 ESAs on the DORA implementation, if I can call it like that. In addition, we have Rosen Neidanov from ENISA, which is the European Cybersecurity Agency. We have Chris Lovejoy, Global Security and Resiliency Practice Leader at Kyndryl, one of the prominent IT providers to the financial service industry, in particular the banking sector. And last but certainly not least, Phil Venables, the Chief Information Security Officer of Google Cloud. With that, I think maybe I start with you, Jerry, to come in already and give us a quick sense of the process at the moment around DORA, where we stand, and some of the things to consider. And then I bring in the rest to give us a sense of where we are currently, some of the cyber risks that we're currently seeing. But maybe, Jerry, over to you first.
Thanks, Nick. Thanks very much, and great pleasure to be here. Thanks for the invitation, and good afternoon, all who are on this. Look, I'll try and do that. I'll try and be as succinct as Alex was in the last session, though maybe I won't be as successful. So as many of you will be aware, the challenge of DORA is not only its technical composition, which makes it a really important challenge for regulators and stakeholders alike, but also the fact that it is a cross-sectoral. It is a genuinely cross-sectoral exercise, which means that its implementation has been given to the 3 European supervisory authorities, the Banking Authority, the Securities Markets Authority, and the Insurance and Occupational Pensions Authority, to implement and to make it all a bit of fun, to do so to a really very, very tight deadline. So DORA came into effect, into force on the 17th of January last year, and it will be applicable to industry from the 17th of January next year. So we've got 2 years to get all of the regulatory work done. And we have made very good progress, and that is testament, I think, to a real commitment by the ecosystem as a whole. And I think that's important to say. Of course, we have had the really good work by the joint secretariats of the 3 European supervisory authorities, by the more than 50 sectoral national competent authorities sitting around the committee table that I chair, but also, and extremely importantly, by the stakeholders, by industry, by third-party service providers, and by others interested in the success of this product. So it really is an ecosystem effort, and for that, I think we should all be very both grateful and happy with the progress that has been made. That progress, I think, is telling. So just 2 weeks ago, the first batch of regulatory products was submitted out of the process to the European Commission, who now has the job of finalizing, getting buy-in from the other co-legislators, and having the regulatory standards adopted. They covered some pretty significant terrain. So, for example, in there you will find the risk management framework for ICT, resilience and cyber risk. You'll find an RTS which does the very challenging job of defining what should be classified as a major incident for incident reporting purposes, and that has been a really important discussion, and I think the product is a very good one. You find the template for the registers of information that all financial firms have now to keep of their, what I like to call the sort of the branching tree of their outsourcing of ICT service provision, and you find a policy, a requirement of the policy on outsourcing. So a lot has been achieved, and then at the same time we have a consultation ongoing on the second batch of products, which covers other really important topics, such as the requirements around, including the timelines for reporting major incidents. I know those timelines are of real interest to many stakeholders. And we have the draft regulation on the rules for the management of subcontracting arrangements. Again, really interesting to people, and a really interesting piece of work where we're trying to get a good handle on this branching, sub-branching, sub-branching of third-party services provision, and how we're going to do that in a feasible and practical manner is set out there. And there is threat-led penetration testing. There's a draft regulation out on that. That's the so-called red teaming, blue teaming, white teaming, and again, really interesting to see that being put on a regulatory footing, and we're very much looking forward to hearing what industry views are. So we're in very good shape, Nick. I won't go on too much longer. Just to say, and I think it is worth saying, that in doing all of this, we have, and many of you will have heard me use these words time and time again. We've had 5 watchwords, 5 principles that we've relied on: momentum, so the importance of getting this done on time; pragmatism, not trying to be perfect, but to be really good; quality, keeping the quality up; proportionality. This applies to so many firms, so many types of business across so many sectors. We've got to make it proportional. It's got to work, whether you're a very small firm, a very simple business, or the largest of firm with the most complex of business. And finally, where I started, the point of engagement. This is an ecosystem exercise. We need, as regulators, to be fully engaged with all of our stakeholders so that we're getting the full knowledge and expertise and insights of the system embedded in the framework. One final thing to mention, Nick, and that is, as well as this whole framework, if you like, of policy, we also, of course, at the same time, are moving towards the rolling out of, for the first time, of a formal oversight regime for critical third-party providers. Those firms who are not financial firms, who are providing third-party services, whether that be cloud or other relevant services into firms. That's a big deal. That's a huge step for the financial system to be doing. So people are very interested in the practicalities of that. Let me say that a high-level group has now been established by the 3 ESAs, again, operating completely jointly in a complete integrated manner. And that group is working out the timings, the way of determining who will be a critical third-party provider, and then how the competent authorities and the ESAs will operate together to do the oversight. Nick, I'll stop there and hand back to you.
No, thank you. You, of course, left us with an exciting cliffhanger, which I will come back to maybe right at the end, Jay, which is, what does that mean actually for the timing for the designation process? But before we come to that, let's remind ourselves why we've got DORA and also actually the NIS directive. And Rossen, maybe I can pass over to you from an NISA perspective, what you see as some of the threats from your side, and then I bring you and Chris and Phil respectively to also see what you see in the market and some of the trends, how the industry is responding. But maybe first to you, Rossen, as to what you see as the threat levels and nature at the moment. Sorry, we can't hear you. No, we've got the same. We seem to have I might have to bring you in a moment again, Rossen. We seem to have had the same problem in the previous session, not quite sure why. Chris, maybe I can pass over to you the same question, but also some of the trends you see, response you see by the industry to the current developments.
Absolutely. Dan, do you hear me?
Yes.
Very good. Well, thank you so much for having me. It's a pleasure to be here. What I thought I would do is sort of describe as you described the why DORA is so important, and I would do so within the context of a practitioner. And I've spent most of my career as a CISO, so unfortunately I've been scarred with a bit of that, and we'll share kind of what I've been seeing. So from a very practical perspective, as a security officer, and I'm oversimplifying this for the purposes of brevity, but as a security officer, when I think about cyber trends, I think about it within the context of a very simple risk formula. And for me, I think about it as there is a cyber risk that I must manage. If there is a threat actor who is prevalent, that threat actor can exploit a vulnerability. That can be a technology weakness. It can be a weakness in somebody's knowledge, et cetera, and create an impact. And if that impact is big enough, then I'm going to spend a good deal of my resources in affecting change within the organization. And so I, as a practitioner, am responsible for implementing control to address the threat, address the vulnerability, or potentially decrease the impact. And so when I think about the cyber trends that are impacting us today, what we have to recognize is that the COVID period had an oversized impact on cyber risk more generally. During the COVID period, we had about 10 years of innovation squeezed into a year. And if you look at it statistically, a large proportion of the organizations that implemented new technologies to support new ways of working, new ways of interacting with their employees, they implemented those new technologies and those new services of skipping over security control within the context or abbreviating security control checks. Now that has introduced a huge vulnerability attack surface that we have to address. Now, at the same time that they've been, organizations were implementing these new technologies, they were allowing legacy infrastructure to get older. And we at Kyndryl, we manage a good deal of the world's most mission critical systems. And in our inventory of the devices that we manage, what we're seeing is that approximately 46% of critical infrastructure assets upon which our critical infrastructure is dependent are considered end of life and end of service, which means they are no longer supported by the vendors, thereby, again, increasing the attack surface. What we're seeing from a threat perspective is that the threats are better organized and much more capable of scaling. We're seeing a good deal of increase in and around ransomware attacks and the increase in the impact associated with those ransomware attacks. What we're also seeing is that, and it's interesting because, on one hand, and please don't take me wrong, I am a huge supporter of DORA and I'm a huge supporter of the approach that DORA is taking. That said, what we do see is that there isn't as much harmonization globally as we're seeing within pan-EU. And some of the balkanized data localization measures in particular that have been introduced over the past 4 years to address some of the increasing threat and vulnerability landscape have led to a fragmentation of requirements in and around the control environment. That has led to some complexity, and that's also leading to some challenges, for global organizations as they seek to comply with the various regulations. And so all in all of these issues, plus the fact that we do see some economic headwinds where organizations are suggesting that the effective budget that they have to spend on security control is, it is either held flat or is decreasing because of the increased pricing associated with hardware, software, as well as the skills gap that's further kind of eroding our ability to impact these issues. Obviously, it is as I'm describing, it is quite an interesting period for us in the industry. I think it is pretty clear that, we've not experienced a nexus of this type. And so, I think, from our perspective, the Kyndryl perspective, my personal perspective, the focus on resilience, within the context of regulation like DORA is incredibly important at this point of time because it does really focus our, critical infrastructure on sort of what it is that they need to do to address this issue.
I found that extremely fascinating, Chris, actually, and in particular the realization about that fast investment in technology post-COVID, but with security not holding up to the same standard, and the issue of skills we discussed at length in the context of artificial intelligence a bit earlier. Rosten, I bring you in a moment. I think just to keep the flow of the conversation going, I just would like to pass on very briefly, I pass on to Phil, because I know you're looking at the same issues from a Google Cloud perspective, but you're also supporting a lot of financial institutions in the rollout of artificial intelligence. And I'd be interested to hear how, building on Chris's point, as companies do invest that bit of money they have to invest in technology and they go into net applications like AI, what that means for cybersecurity risk and for the work that you're doing.
Yeah, sure. So, I mean, just first of all, kind of just building on some of what Chris said in relation to DORA, I mean, I think we definitely see threats increasing from the usual nation state and organized criminal players. And the interesting thing in the context of DORA, which is why I think the supply chain risk management is so important, we see attackers not just attacking financial institutions, but also attacking their third, fourth, and sometimes even fifth party providers. And so there's a clear requirement industry-wide to make sure that we're focusing on security across the ecosystem, not just in individual institutions. And I think, us and, possibly some of the other large technology companies are investing significantly to play a part in that. I think it's also significant from a DORA perspective that, again, echoing some of what Chris was saying, is that we move beyond security to resilience, and thinking about resilience more broadly starts to position companies to think about the end-to-end risk management of their services, not just point security issues. And in turn, that has them thinking deeper about not just the resilience that's built into their service providers, in our case as a cloud provider, but also how customers can configure themselves to take advantage of the resilience that comes from these service providers, and make sure that they're adopting a model to think about that. To your question though on AI in general, one of the things we're seeing when you look at the AI landscape, there's a lot of discussion about the threat actors, again, whether it's nation state or criminal groups, making use of AI. And we've certainly seen some of that. There's, fraud, scams, deep fakes, many other activities going on that people are working to counter. We also see, when you look around at what's coming in terms of attackers using AI to scale their activities and upskill them, their capabilities, is something that's clearly appearing and is going to come more. On the whole, though, we're very much more optimistic about the use of AI by defenders to scale defensive capability and to aid upskilling of people in organizations of all scales, to have AI assistants provide engineers, risk managers, other personnel, security teams with the ability to respond to attacks and actually think about resilience more effectively. So just one example, we've invested a lot in a collection of systems we collectively labeled DUET, which is taking our AI models and using them to augment people's abilities to configure cloud and services and software in secure and resilient ways. And we think ultimately the appropriate and responsible use of AI and the quick adoption of it is going to permit companies to outpace attackers, both in terms of security and resilience. We ultimately think AI is a defender's advantage, even though some quarters are talking about it differently. Ultimately, it plays out to be a defender's advantage.
That is very interesting, because we spent a lot of time this morning on AI and how it can help with fraud prevention, AML, but actually I've never thought of it as a tool for cybersecurity defense. Fascinating. I will come back to you and Chris in a moment, maybe for some thoughts you might have on DORA, maybe some reactions you have to Jerry's comments. But before that, Rosten will try again, because I'd still like to hear what you see as some of the risks globally. Phil just talked about state actors, but maybe you can elaborate on that a little bit more.
Yes, I hope you can hear me this time.
Can. Excellent.
Excellent. Very good. Yes. So usually at NISA, we produce a yearly threat landscape, and I have looked through it to see, what is the specificities for the financial sector based on the information that we receive from multiple sources and covering different sectors as well. And in our view, we have seen that, of course, ransomware is the top threat that we have been able to identify, following by the denial of service and some data leakage and data intrusion information. But this is global for, let's say, the whole spectrum of different sectors that we see. When I'm looking at the banking and finance, the view is a bit different. Here we are seeing that the attacks on ransomware are not that predominant, but it is the denial of service and the malware that are coming, taking the top spots with some eventual data leakage or data intrusions, which are very, very minimal. But we see a big increase also in social engineering there, which is, in my opinion, also tied to the artificial intelligence. We have seen more and more robots trying to talk over the phone and convince people to do things which are not supposed to happen. In terms of motivation, of course, on a global scale, the financial gain motivation is the predominant motivation type. But when we're talking about banking and finance, we are seeing let's say, a bigger motivation towards disruption, towards stopping of providing services over the internet. And we're not sure if that is directly related to the situation with Ukraine or with the war with Ukraine, but this is what we're seeing at the current stage. In terms of actors, once you can imagine that the actors that are dealing with ransomware and denial service are going to be the top actors across all the sectors. But when we're talking about finance and banking, we see actors which are associated, of course, as I said, with denial service, like no-name, anonymous Sudan. These are the biggest one that we have seen. And we've seen also some of the others which are associated with malware and ransomware, like Lockbit, Clop, Killnet, as well, that are doing it pretty much all sectors, not specifically for finance, but they have their effect also in the financial sectors. In terms of incidents that we have identified across all sectors, banking and finance comes into 7th place. So before then, we have sectors like public administration, health, digital infrastructure. One could consider cloud is part of digital infrastructure, manufacturing, transport, and then we have banking and finance. So I guess taking a point of view also with the situation in Ukraine, some of these public administrations that are taking top spots are because of the situation in Ukraine. Same goes for digital infrastructure and manufacturing. And as I said, banking comes into 7th place out of somewhere 23 sectors that we have been able to identify. Just to mention something final, 61% of the incidents that we have been identifying globally are due to supply chain attacks, due to attacks being made through third-party access. So not directly attacking the institutions, but through supply chain provider. So that's it from me. Thank you.
Actually, Rosten, that's very interesting, because I'm wondering to what extent your statistics show the number of attacks or the, let's say, impact on an industry, because I would expect financial services to be much higher, but also having much higher levels of sophistication and defense than some of the other sectors you've described, not least because of the two companies that are with us. Maybe I'm conscious of time, but very briefly, Chris, back to you. Any thoughts you have for Jerry on DORA? Anything you would like to see in kind of for the European operational resilience framework? And then the same question to you, Phil, and then I might close with you, Jerry, on some final thoughts and on that timing question. Chris, to you.
Oh, thank you. And very quickly, I think one of the things we always have to, remember is, and where I think DORA has provided a huge benefit to the marketplace. And I'll touch on 3 areas. One is on the opening of the aperture to focus on not simply cyber security related incidents, but any disruptions associated with cyber related activities. We have to recognize that the level of innovation, digitization, interconnectedness has created an environment in which our financial services are dependent on IT infrastructure for the delivery of services. And DORA is not just about those disruptions that are associated with cybersecurity attackers, but disruptions that can occur through human mistakes, through network outages, et cetera, et cetera. And so we have to recognize that things like hardware, software failures, not security-related failures, but hardware, software failures have a greater impact on driving disruptions within the financial services sector than cybersecurity attacks do. And so, again, keeping this focus on resilience and enabling organizations to anticipate, protect against, withstand, and recover from any and all cyber-related events, including but not limited to cybersecurity events, is important. Second thing I would say is, and I know this is going to be strange for a third-party provider, but again, going back to COVID, where we saw the attackers focusing is, as Phil was describing, on the third-party providers. They are in the hardware and software that we procure. And so we all have to recognize that third-party, fourth-party, fifth-party dependence is critical, and DORA's focus on that particular area is critical as well. Last but not least is DORA's focus on raising awareness and requirements. Now, of course, it's through the, sort of the potential specter of criminal penalties, including administrative fines and directed remediation, et cetera. But the level of awareness that has been built at the supervisory and management board through DORA has been exceptional. And so, again, I would applaud, sort of the focus there, and would say just more of it over time.
Again, I think you make very good points, and I think a key point of DORA is the governance, not just the reporting framework, but strengthening the governance around cybersecurity within financial institutions, which is so important, and for the supervisors equally. I think Jerry can speak to that. Phil, from your perspective, if you had 2 or 3 requests or observations on DORA, what would they be?
Yeah, so we're very, very supportive, and we've been documenting our journey to be able to demonstrate compliance and supporting our customers. In fact, supporting the regulators as well, and in fact, I think like many large-scale critical service providers, we actually kind of welcome the scrutiny, because I think it's important for us to maintain a healthy supply chain that benefits everybody. The thing I would say is this is something that Chris mentioned before as well, is we have to be careful to make sure that we don't expect perfect harmonization between different jurisdictions, regulations, but it'd be nice, but I think it's hard to do. But at least kind of broad brush alignment on objectives and principles. I think that's something that I think the EU with the UK and the US and other markets, we would hope that we continue to see some work, to bring that into alignment. The other thing I would say as well is we also, this is something I think Jerry mentioned in terms of, and I may be kind of misusing the phrase proportionality, is to think about not just directing the attention at the largest of service providers, even though the largest of service providers like the hyperscale clouds can and should bear significant obligations because of their position in the market. I think we've also got to make sure we don't ignore the long tail of smaller service providers that have a disproportional criticality in the marketplace. We've seen in the past year cyber attacks against identity service providers that underpin many infrastructure, or the identity components and messaging components of some of the cloud providers have come under intense attack and have been shown to have a causal effect across the wider industry. And so there could be a situation where the small SaaS providers or small identity providers that in the scale of service providers are quite small, but in the scale of their potential impact, if they were compromised, the ripple effect through the supply chain would be quite large. So I think when we look at proportionality, we've not just got to look at size of the organization, but the effects through the ecosystem of that dependency graph should an event occur to them, irrespective of the size of that particular organization itself. It's the size of the impact that counts.
Thank you, Phil. And finally, Jay, I think one of the big themes was supply chains and supply chain management around this. Maybe some final thoughts from you. And yes, maybe I know you've set up this high-level group, which is very interesting on the oversight. Yeah. But the question, of course, for many is, when do they expect to receive their letter that formally invites them to become a critical third-party provider with all the benefits and joys of meeting you and your colleagues regularly that comes with it?
Thanks, Nick. You put that very, very kindly. So let me, actually, those are the two things I wanted to pick up on from that very rich set of insights. I think that supply chain question, I'm really sort of pleased to hear both Chris and Phil and indeed Rossin call it out, because it is a very big focus, and it's one of the most challenging aspects of the new framework, for the reason that sort of Phil also talked about, which is, you can't just think big. You've got to think how it all works in reality. So two things to think about, and these are things that are currently being consulted on. So we really do look to stakeholders to help us with this. One is how we think about that whole management of the subcontracting third, fourth, fifth, sixth party providers. And what we've tried to do in the draft regulation is to talk about, because obviously all of this from our point of view really comes through the financial firm nexus in the first, that's where the risk from our point of view as financial regulators, that's where the risks ultimately crystallizes. So that channels our perspective. So we've tried to talk about, on the one hand, the financial services entity, and having a good overview and monitoring of its entire supply chain, so that it's not blindsided by anything there. But then with a focus on what I like to think of, if you like, of sort of the main branches and limbs of the kind of the tree that is its supply chain. And that's a real challenge to get the language and the concepts right there. So we've set out in the draft RTS what we think is the right way of talking about this, but very much welcome input. The other bit where it sort of comes up is around sort of threat-led penetration testing, where there's an interesting discussion going on around sort of pool testing and how that might be sort of a one way of getting a good lens on TLPT. But again, in the level 1 text, that's the legislation. And that's not a very prominent concept, and so we are sort of constrained in how much we can say about it. But again, welcome at least initial thoughts on that. Then, as regards timing, I think the way I would say it is this: so this high-level group is established. It is now moving with determination towards the implementation of that third-party oversight framework. As I said at the beginning, we have been determined throughout that we will do the things we need to do in a timely way and in an on-time way. So for me, it's not so much, what's the timing? It is how to pragmatically get to that timing, which is the beginning of 2025. So we are currently looking at things like, for example, the establishment of the joint examination teams between the ESAs and the competent authorities, and how they would be resourced, how they'd be configured, who would do what, how we would decide who's on what. So there's a lot in that. And then we're also looking at, for example, because the level 1 text, remember, says you have to refer to the registers that the financial firms produce to determine who is a critical third-party provider. We won't have those registers formally until next year. So how do we put something pragmatic in place? So I can't give you a precise answer to when will the letters land on the desks, but I will say that we are moving with determination to pragmatically have this up and running as soon as possible from the start of 2025. And I'll leave it at that, Nick.
Thank you, Jay. I think even that is extremely helpful to hear for the market at large. And with that, I would like to thank all of you, particularly under the time pressure that we had. Chris, Phil, Rossin, and Jay, thank you for being with us on this very important issue. And I share Jay's view that it was a very rich discussion for the time that we had. Thank you to all 4 of you. And knowing this, we might spend more time on this at the next conference to see whether you've reached your goal, Jerry, or not, we can give you your scorecard next year. But knowing you, it will be a good one. Thank you.